All right, everything looking good. We are live. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on May 11th, 2022. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So, obviously, we have had quite a bit of volatility in these markets. We got our CPI print. We have seen basically, well, just the trend continue. Haven't seen any surprises of a late. We can talk a little bit about a couple specific incidents, but obviously we saw the Terra Luna situation blow up. Again, not surprised. Most of these algorithms, most of these backings of these stable coins, most of these cryptos have not been audited. I've just been slapped together and have no, real security or use case scenario. It's very unfortunate for all the people that lost 90+% in a single day, in a single candle, but it's honestly not surprising, and I expect it to continue. So that being said, we're going to jump right in and start taking a look at these markets. So taking a look at the TNX, so we're seeing what looks like a topping pattern or candle here. We basically sold off, pushed back up. We basically closed that gap down from the previous day, and then we closed at the lows. Looks like at least a short-term temporary top at the bare minimum. We do see some bearish divergence taking place between these 2 points. So the key level we're going to be paying attention to is, do we take out that previous low at 2.74? So that's really what we need to watch right now. We are coming out of the bullish control zone. We are getting the hard sell signal. We do have a bunch of red histograms. Typically, we get a bounce around this level. The histogram will bounce off the slope line. But I don't think it's going to change the direction overall on the TNX. So TLT looking like it's putting in at least some sort of potential bottoming pattern. Again, we're seeing the opposite here. We're seeing bullish divergence at the bottom of the pattern. And now we're seeing a decent bit of continuation once again after filling that little gap. So next we have U.S. oil. So WTI crude fell back down below that key resistance we were hoping would act as support. Fell down below it, pushed all the way back up to it, and then closed back on top of it again. So it's essentially still floating up along this line as sort of like the mean, as its middle point, but it's just oscillating along that. So it's slowly just creeping back to the upside. The main thing we need to pay attention to is, what does this look like when it starts to break in one direction or the other? Because we still know 114 is the area to the upside that needs to be taken out. And we know that, below 100, somewhere around like, that 97 or 94 level is where we start really paying attention to the downside. In the meantime, we're basically just right smack in the middle. So hey, what's going on, Yoda? He said, hello. Oh my God, what a day. I feel for the people that was affected by this. Yeah, I mean, it's not like it was a surprise. We didn't see it coming, so. I mean, we're looking at what amounts to, some of the worst fiscal and monetary situations in history going on right now. So Dow Jones is next. So we not only did we push back up, we got rejected hard and then closed at a new low. So we are down to 31,834. New, basically, cycle low for this. We lost a key support. We have obviously the red support right here. We lost that a while ago. It acted as resistance. Now we've lost that purple support as well. We're headed down to our target. The initial target still being that 236. We're well on our way. It's only another $500 to the downside, so we might hit it as early as tomorrow. But that is 31,309. And then we have our next level to pay attention to at 29,500. And again, that was the top in the Dow Jones from pre-Rona dump. So, I mean, that's in between the 236 and the 382. So obviously we're paying attention to 236 in the meantime. But then after that, we're really looking for 29.5. And, that's right back to 2020 February levels. So that's over 2 years of gains completely wiped out. So we'll see what happens when we get there. Next, we have the S&P. Again, no surprises here. Completely melting down. A new low, new cycle low. Still holding up best of all the major indexes. We did hit our target today of the 236. We did hit that heart line of the channel, and we have continued to break down from that. So we really need to pay attention to which of these levels, if any, hold up. Obviously, that 236 level was key. The next key level we have is basically somewhere in between like 368 and maybe 355. But overall, it doesn't look particularly great. It is under 400, which was a key level to hold on. We're looking for some exhaustion signs on some of these indexes, some of these stocks in general, and we're really not seeing that at this point in time. So next we have IXIC, NASDAQ Composite, again has broken down to a new low. We have lost the 382 support. We're now getting dangerously close to the 200s on the weekly. We basically already have hit the 200 exponential. 200 simple is still below us on the weekly. This is obviously the daily chart, but that's what that box represents. We are below the 382. So next target, if we continue to the downside, is somewhere in between that 200 at 10,785 and the 0.5 at 10,368. Again, in the bearish control zone, all red histograms, no signs of exhaustion. Russell, again, brand new low. Looks absolutely horrendous. The Russell has officially reached our 2020 February levels. So we are all the way back now. If you bought the Russell anytime from, basically 2020 in the beginning of the year, we're right back there now. So it has literally wiped out, over two years and some change worth of gains. And that also lines up again perfectly with our target of the 382. So we've officially hit the target at this point in time. So again, I do expect support at these levels, especially when we reach like key resistance from before. You would expect at least some kind of dead cat bounce or something here. But we could easily go lower. I don't want to get too excited to buy into these markets, try to catch a falling knife. The next level to watch to the downside is a 0.5. I really don't want to go that low, but 1546 wouldn't surprise me at all, as all these indexes look pretty bad. Russell in particular looks horrendous. Next we have XLE. So it had a pretty bearish selling coming in, and then we had a little indecision. Then we pushed up and we have a hard rejection. So it does look like energy is at least temporary topping right now, and then that lines up with our like 3 or 4 drives of bearish divergence that we have been putting in, that we have been watching, and it does look like, in fact, we came up as close or probably perfectly to the 2.618, finally hit our target to the upside, and now it looks like we have topped out. Maybe this is drawn just slightly off. Maybe the a different index or something like that, or fund hit it perfectly and this one didn't quite. But I think it's the point across on energy potentially having been topped here. Next we have transportation. So again, transportation saw that breakdown and continuation as we discussed previously, as we have been expecting, and it does look like obviously the transportation sector has topped out. But now what we're looking at is, did it temporarily bottom out as well? So we have this descending broadening wedge playing out here. We're at the bottom of that wedge currently. So we would expect some kind of temporary support, but the real level we're looking for is somewhere around 67, 68. I don't have to tell you guys that these markets are trading extremely technically. Basically everything we have been expecting and predicting has been playing out perfectly. So we're obviously, on the heartbeat of these markets, and that's where we need to stay. If we're going to look for any potential, continuation or reversal moves that we could play. Next we have XLF, financial sector, again breaking down to new lows. Looks absolutely horrendous, losing the 236 as support, losing the descending broadening wedge or channel that we had going on right here. So again, falling down from this level. We would expect support around where we're at right now, but it could easily go lower. We already retested some of the breakdown levels as resistance, and we failed to reclaim them. So do expect continuation to the downside. So XLV is next. So since we put in the high, we're still now just coming down here to threaten the previous low. But technically this is our highest high, and we have been putting in a series of higher highs this entire time. So not only taking out this low will be substantial at like 124, but also that's going to signal extreme weakness as we have broken down from the 200 exponential and simple, and the slope is both to the downside on those. And then obviously the XLV, we would expect to hold up better than most in the, coming circumstances, but it doesn't mean that they're not going to continue to sell off. And at this point in time, this looks like a very clear distribution topping pattern, which we're at that key support level that needs to hold. Next level to the downside, 236 at 122.77. That's not far away. And then we have much further downside at 111. Could take a while to get there though. XLU is next. So we obviously came back down, retested that key support level. Not quite to the 200 exponential and simple. We are getting a little bit of strength out of this, but some mixed signals and clear rejection. I'm not looking to jump all over this right this second, but consolidation at this level and then continuing higher would not be a big surprise. And again, that's one of the safety plays. XLP, consumer staples, again, back at the key support here in yellow. So at this point in time, what we're really paying attention to, let me get rid of that one for a minute. And then let's see from our previous little micro swing to where we're at now. We're basically slightly below the 0.5. So we want to see this pull back to somewhere around the 618 and hold support, or possibly the 200s and the 786. So paying attention to like 75 to maybe like 73.50 for support here. Again, we do expect consumer staples to hold up better than the overall market, but it does not mean we don't see continued downside. Next, we have real estate XLRE. Again, just selling off very aggressively to a new low, closing at those lows. Again, looks absolutely horrendous, confirming into a bear market. And now, at this point in time, it's hard to deny that this isn't some form of topping pattern. Whether you want to call it an ugly, right shoulder up here, and this is our head and shoulders pattern. Whether you want to call it a double top, and we just put in a slightly lower top right here, it doesn't really matter. Regardless, we have some bearish divergence. We're breaking down from a key support level, and now we're going to start paying attention. This was the short that we had discussed a few weeks ago, and it was a 6.69% stop loss if we broke out to new highs, and it was a target of 12% to the downside. So about a 2-to-1 risk-reward ratio. We told you that the probability of it playing out, trying to pick tops on a market, is always going to be below, ideal, but as a perfect example, obviously that is the situation that played out perfectly. And now we're continuing down to our second target as well. So the first target was a 236 neckline retest. Second target is the 382 portion of the measure move. And then obviously our 382 Fibonacci as well. And that's coming in at 39.23, at which point in time we would take profits on this trade, potentially look for, that counter trend bounce. And then depending where it runs into resistance again, reopen a short position with expectations that it goes lower to the 0.5. Next, we have VWO, Vanguard FTSE Emerging Market ETF. Again, breaking down. So we did take out the low as expected. We retested the lows, swept the lows, got a pathetic bounce, retested the 382, and now we broke down to the 0.5. So we have officially tagged our 0.5 target. We are well below the breakdown from January 2020. So at this point in time, I mean, this thing is getting absolutely wrecked. Looks horrendous. All the people that were saying emerging markets, that's the place to be, they're looking like damn fools right now. And I'm sure their account balances are looking even more embarrassing. So next target to downside, 618. We do expect this area to hold at least temporarily. This was our target to downside, but it is possible we continue down to like 38 or so. The real level we're watching for a MAC would be essentially, this yellow support at 36 and our potential, ascending support line here in green. All right, so next we'll take a look at the DAX, see how Germany's doing. So we got very, very close to our entry point. Did not quite get there, unfortunately, but that would have been the area we would have entered at, was at 13,248. Unfortunately, we did only come down to about 13,378. So we're off by about $100. Very, very small margin, but that's where we would be looking to potentially enter for, a new high or a higher high. Now, it does not necessarily mean that that's not going to be the case. Maybe we go higher from here, maybe we go lower from here. We really don't know at this point in time. We'll really have to look at how this reacts off the 382. It is starting to build some momentum to the upside and does look better than many things. But again, really all we're looking for out of this is a retest of the 200 exponential and simple. And, we had a pretty aggressive push up there once. So that was probably the opportunity to take that trade. Whatever trade we get next is going to be, probably a little less profitable. So the CN50 trying to push up here again after that rejection. Revisit of the lows. Came very close to, but did not take out the previous low. So we don't see any form of divergence necessarily. Maybe a little short-term daily bullish divergence between these points, but nothing from where we really want to see, which is like the broader. But eventually we do expect some sort of retest back up here. But at this point in time, the 821 has crossed the upside before that happens. So there's really nothing to see until that does take place. So UK 100. So we've been expecting the breakdown, been discussing it. Obviously, this was holding up better than most, but it has lost to 200 exponential and simple. 200 exponential has already rolled over, and 200 simple looks likely to as well. If we just basically don't get back above 7,300, it's going to happen regardless. So, and at this point in time, we see, sort of indecision candle and then a rejection of higher prices, and now we would expect continuation to the downside. It doesn't look particularly good here. Again, no signs of divergence or anything. Probably getting ready to go much lower. So 236 is our initial target at 71.16. After that, we already tagged the 382. So if we don't hold at the 236 and we come back down to 382, more likely than not, we come back up to 236 and then we go lower. So, the macro target to downside, probably closer to like 6,500 at this point in time, unless the 236 holds. But, some of the, I don't like to mix fundamentals and technicals too much. Obviously like to look at both of them through their own lens. But let's be real. The fundamentals for, Europe, UK in general aren't looking particularly great right now. So EWZ next. So this is our Brazil ETF. So we did come down to our target. Almost got there. We're literally like pennies off of the green box area. I didn't expect us to get there that quickly. But, we'll wait it out and wait for a little push back down. I do expect this to hit support right here. And then I want to see the reaction and it hold. And then we can maybe look at like that $42 mark to the upside off of, roughly around like 28. Should be a nice trade. But as far as I'm concerned right now, we don't want to jump the gun on this. We want to see basically what happens. But I do think we get an entry right around this level. And that could lead to a very nice trade, as I eventually expect us to come back up here and retest. Oh, we already got that one in play. Sorry. So yeah, we're paying attention for this. We could take the entry. I expected this to take longer to get here. So I figured the entry off the support would be a little bit higher. Since we got here so quickly, we could pay attention to this for that entry. But essentially what we're looking for is a pretty tight stop loss, in this case 6%, with a target to the upside of almost 40%. It says 38. Let's tighten it up just a little bit. So 37%. It's going to give us a 6-to-1 risk-reward ratio, basically from where we're at right now. If you think that we're in some kind of commodity bull run, if you wanted to, diversify a little bit out of your country, and you had some bullishness on the emerging market play or on commodity space in general, obviously Brazil is a good place to be. We have seen quite a run up already off the lows, but this is definitely presenting itself as a potential buying opportunity. So I will be looking out for that. And then also we see the buy sell buy pretty tight right here, our divergence signal. So that's basically telling us that this is a bullish area and we're starting to see some support come in. So if we get a second green histogram, we'll take the entry on this play and ride that up for a quick little 40% gain. So that is it for those bad boys. Take a look at what we got going on with the DXY, and then we'll take a look at our tech stocks, some of the market leaders as well. Yoda says, the really insane thing is that Do Kwon, the Luna founder, arrogantly dismissed this kind of attack on Twitter when somebody pointed it out in November of last year. Of course. I mean, this was the guy somebody was asking me about, wasn't it bullish that they were going to be buying $1 billion worth of Bitcoin? Well, how did that work out? Exactly like I said. Sure, maybe he bought 200 million, maybe he bought 400 million, but what happened? They had to liquidate it all because their unaudited trash bag crypto project, basically imploded. So from what I understand happened, and this may not be correct, but from what I understand happened, there was an issue with the peg of Tether because somebody sold like $1 billion or $500 million worth of Tether. And so that caused the Tether peg to slip slightly. And then that is what is based off of like the Tether. It is like the foundation that the stable coin for Luna was based off of. So when that lost its peg, the algorithm started trying to like balance it out, and then there was some liquidity issues, and that essentially caused a crash. But from what I understand or what I saw, it was over 90 something percent, 95% crash in a single day. I believe it was last stream, maybe 2 streams ago. I was literally saying, be prepared for some of these cryptos to lose 90 to 95% of their value. But I expect at least a 50% drawdown in some of these things, and possibly overnight. So obviously, didn't know that was going to happen exactly, but doesn't surprise me even in the least bit. I do expect many, many more projects to implode, literally thousands of them. So, it is what it is. Obviously, the Bitcoin dominance chart was pointing a lot of this out. Obviously, we were seeing some unnatural behavior taking place in Luna recently as it was staying strong while everything else was selling off. And I mean, the truth is, it's a giant trash Ponzi like scam. So, if you lost money, well, you got scammed. It is what it is. You fell for a Ponzi scheme. You got rug pulled. The trash bag algorithm collapsed. Whatever it is, it's garbage. But, further makes my point. So hopefully none of you guys fell victim to that. If you did, maybe in the future, you'll listen a little bit more better. But obviously, it's very unfortunate to see that taking place. But that's going to draw some regulatory scrutiny. People are going to be writing letters, calling, complaining to, Congress, to, anybody, anyone that'll listen. But, if there's still someone alive at the SEC, maybe they're paying attention to this and seeing some of these blow-ups. We'll see what happens into the future, but it's not good. I mean, that's not what you want to see happen in a space if you believe in it. But it's no surprise. I mean, the whole space has looked like trash for, 6 months, 3 months, a year, however you want to look at it. So DXY is next. Obviously, just up there at the highs again, continuing to just grind to the upside. 104 almost it's at now. I do expect continuation still. We're seeing the sell-by-sell signal pretty tight, and we've seen some divergence taking place. We're seeing all red histograms, but this thing is just continuing to melt up. I'm not going to try to pick the top on the DXY, not when I think it's going much higher, even though I do think short-term it probably will top out soon. So Tesla next. Obviously, Tesla having a complete meltdown below the 200 exponential, below 200 simple. 200 simple slope is basically flat at this point in time. All red histograms, bearish control zone, looks like trash, and literally dollars off of the lows. So we're at 734 right now. I expect us to retest 701. If 701 holds, that will look okay. We really needed 770 to hold. That didn't hold, so not particularly great. The next level to watch is that previous low, and if we take that out, I think we come all the way back down here. And all the way back down, I mean to 236 on the macro, and that's at 538. So that has been our target for months now, and it looks like we're headed back down here again. Obviously, we were expecting some kind of bottoming pattern around this area with some bullish divergence taking place. Did not expect Tesla to go to new highs, but basically called out the 1.618 Fibonacci extension from the previous high to low. Elon obviously called that out as well, as this is exactly where he was selling his position. And then we just see a series of lower highs and lower lows after that. Tesla obviously looks like trash right now, so much, much better than most other things, but officially below its 200 exponential and simple. So when we see these big, heavy-weighted stocks below their 200 exponential and simple, and they're starting to slope to the downside, and they were the only thing that was holding the market up, while many of these other stocks were already down 60, 70, 90%. I don't think that bodes well for the overall market. NVIDIA obviously selling off to a new low, down at 166. Our target was 176, already hit that. Nailed it perfectly. I do expect continuation though. We're seeing no strength right now, so I'm not going to just enter into this trade right now until I see some form of bullish divergence. Perhaps if this starts rolling over, we can get a nice entry on that or something to that effect. But again, I'm not jumping in trying to like re-enter these as quickly as possible. I'm looking for signs from individual assets and the market as a whole that it's at least put in a temporary bottom. So in my opinion, what it looks like wants to happen right here is we see quite a bit of support around that 150 level, and that kind of lines up with the 786. It also lines up with the macro 382. So somewhere around here looks like our next target. So obviously NVIDIA has been hitting targets left and right. I hate to be bearish on NVIDIA as it has been an absolute darling to us in our portfolio. But that being said, looks like we are headed back down here to, probably those 130s. Apple is next. Again, Apple just seeing a massive, massive bearish candle today. Massive sell-off back down to 146. Basically destroying the support level that we've been paying attention to. Obviously did not hold we have broken down below that with an extremely bearish candle. So what we're paying attention to now is, since we put in our highs here, we just put in a new low. So we have a high, we have a low, we have a lower high, we have a lower low. Expect continuation to the downside. Where's that going to take us? We have some various support levels along the way, depending on how you look at this. Once again, Apple obviously is holding up better than, I mean, damn near anything in the market that is not currently like crushing it. So about 140 is our target to the downside for now. We'll see how that plays out. And then we can start paying attention to, now that Apple is starting to have some serious like technical damage done. Obviously it was holding up for quite a while. Yeah, that's going to line up almost perfectly with our 236. So that's going to give us our short-term target, at least for now, basically somewhere around here, in between like 136 and 140. Next, we have Microsoft. So I talked about Microsoft. Actually, it was in the group. We were talking about Microsoft being in the danger zone. We had discussed this potential head and shoulders topping pattern, and essentially how this breakout from the descending wedge was essentially the measure move breakout back to the upside. There was essentially a strong right shoulder. And now we've seen that roll over and we've lost the neckline. So we know that we have a couple targets to the downside. 382 is next, as breaking down from the neckline is essentially losing the 236. So we do expect around 241. And then the measure move of the head and shoulders breakdown actually takes us closer to like 221, which roughly is where the 0.5 comes in, about 216. So at this point in time, I would expect either the 382 or the 0.5 to be our target to downside. Now it is possible that we see something to the effect of, a temporary attempt to push back up here, but we really need to see, macro moves in the market. I really want to see, what's going to happen. The whole market's going to get beat down. Everybody's going to get extremely bearish once they shouldn't be bearish. They should have been bearish before. They weren't listening. They were all bullish. And now they're going to get bearish right at the worst time. Where's that worst time going to be? Is it right now? Is it at the 382? Is it at the 0.5? We don't know. We'll know from the market, though, because we'll tell the overall sentiment. Because all these people that were permabills are now saying, I don't know. Or they're just saying, well, I'm continuing to add to my positions that are down 20, 50, 70, 99%. They sound like absolute fools right now. They're just stuck sticking to their guns. I cannot imagine being so wrong in these markets as so many of these analysts have been, and still trying to act like you know anything. At this point in time, if I was one of these people, I would literally throw in the towel and just go, look, I was wrong. I don't know what's going to happen. So I'm just going to kind of, roll with the punches here. But at this point in time, you got to stop pretending rather, like you know what you're talking about. Because obviously you don't. You obviously have no idea what you're talking about. Because somehow we, on this channel, in our group, have been able to figure out all these things, these patterns, what was going to happen. Topping patterns, bear markets, etc. Somehow we've all managed to figure it out. So obviously the market is sending out signals, but certain people, certain analysts or influencers obviously are choosing to, or too ignorant to listen, or maybe they're just they just need to be humbled, and that's definitely the case at this point in time. So Amazon next. So I've been discussing our Amazon price target, obviously of $2,000. Again, I did not expect we would be at that target days later, but at this point in time, we're at 2107 was the close today. I fully expect us to hit our target. Our target is 2047. That's where we were talking about reloading on this position. We were talking about the 20-to-1 stock split on Amazon and being able to buy Amazon at basically $100. I didn't expect it to happen this fast. The truth is, I'm not ready to necessarily step right in on anything right now during a complete meltdown. We're looking for some signs of exhaustion. We're just not seeing it yet. So what that tells me, and this is back to 2018 levels now. So Amazon, the darling, the baby of everything that's taken place, this is the absolute best case scenario. What has taken place over the last couple of years for a company like Amazon? They were positioned to take advantage of this like no one else was in the entire world. And now all that has been given back. Every bit of that price action, every bit of that pump, every bit of, the money that was made in Amazon is completely wiped out now. No surprise. Obviously, we've been expecting it. So we're going to look for a key area to reload on this position, and we're going to be getting it dirt cheap, which is great. Could go much, much lower. So Netflix continuing to just absolutely melt down. Again, new cycle lows. This thing is complete trash. It's definitely on its way to zero. It's at 166 for now. Just to remind you, all the people that are in profit on Netflix, if you had bought Netflix in June of 2017, you now have officially lost money. You're a loser because you bought Netflix in June of 2017. How pathetic is that that this company is completely melting down. So obviously they're going to have to get in there and gut this company, stop spending money the way that they are, and just accept the fact that, you know, they had the first mover advantage. They failed to capitalize on that, and they have literally given back all their gains. You know, and the next target to the downside, that next support at the 382 is at $122. This thing was at $689. I mean, what an absolute embarrassment. I mean, what a letdown by a company, by the governments around the world, by the fiscal policies, everything. Just absolutely pathetic. And our next target to downside, the 382 at 122, that's August 2015 levels. So we're looking to wipe out every bit of gains that's been made on Netflix since August of 2015 with this next sell-off. So, I mean, just tells you, again, a company that was in position to take advantage of the situation to the next level and completely melting down. There are definitely some opportunities in these markets, or will be in the very, very near future if they're not already here. Google is next, Alphabet company, holding up slightly better, holding on to those lows for now at 22.72. We obviously still have our 382 target in play, which is slightly lower, again at about 2,000. Again, expecting the same type of deal with Google as we're seeing with Amazon. I did not expect Amazon, obviously, to melt down that quickly. But again, that just shows you just, you know, how overvalued a lot of this trash was. But long term, obviously, you know, Amazon, great. Google, great. But short term, I mean, there's definitely some pain. And then Facebook is next. Obviously, Facebook continuing to melt down. It's holding key support for now. It is technically not putting in a new low yet. But I fully expect if this continues, this sell-off, 157, which is going to be our 786 on the retracement. And again, just a reminder, you know, Facebook is below, again, it's 2018 levels. So a lot of these stocks were already going parabolic leading up to the Rona dump. And again, we have just completely wiped out all of those potential gains since then. So just further explaining, reiterating why it is so important to take profits when you're up and cut losses when you're down. So just a reminder, though, if you are just tuning in, then none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your research and trade responsibly. So on to crypto. So Bitcoin put in officially a new low. So obviously we have a high here, we have a low, and then we have a new high, and now we have officially put in a new low. So we basically came down lower than the previous wicks from back in the, you know, like mid 2021. Very key levels have been violated here. I mean, and I'm talking about not just a little, like, you know, I'm talking about a violation. So as long as we're holding up these levels for now, it's possible they still hold that support, but obviously markets look like trash. You know, again, the 200 exponential and simple have rolled back down, clearly in a bear market, bearish control zone, all red histograms. I mean, new lows every single day. Literally, it's like, oh man, what a new low today. I wonder what's going to happen tomorrow. Probably another new low. So below 30,000, the level that was not supposed to ever be violated. Below Michael, the failure sailors entry point for MicroStrategy, MacroStrategy, and what other BS scams that he came up with. So it's official now. You know, his, whatever it was, $1+ billion position is underwater. So he is actually a loser at this point in time. The cult leader, the Bitcoin Judas that everyone was following, was actually leading them straight to the slaughter. And you know what? He's in line right there in the front. So if Bitcoin continues to sell off, we may see margin calls, as he has, of course, borrowed money to buy more Bitcoin against his current positions. Not to mention, his company is MicroStrategy, MacroStrategy, etc., conglomerate. You know, publicly traded company is just absolutely cratering, collapsing to the ground right now. And then, of course, I mean, no surprises here. You know, his reputation literally precedes him. So if you're not familiar with what happened to him in 2000 and MicroStrategy, might want to look into that now, because fully expecting that to happen in MicroStrategy 2022. Obviously, we've already seen that taking place. His trash bag company, trash bag stock, and trash bag Bitcoin position are all looking absolutely terrible right now. So Bitcoin futures chart, I mean, looks horrendous, putting in new lows. So what do I expect to happen? New lows. Do we find some kind of support at this level? I would expect it to. I would think that Michael Saylor and all his little culties would get all over the internet and go to everyone they possibly could think of and gather up every bit of money they possibly can and try to buy up as much Bitcoin as they can, because they're trying to defend $1 billion position. So if you're trying to defend $1 billion position, I would imagine you could scrounge up a couple $100 million. I don't know. We'll see. We will see, but does not look good. Obviously, no surprises here. We've been expecting this. We're at the key levels. We've had this drawn on the chart literally for months. So obviously, we have our macro high at 70K. We have the A. We have the B. We underperformed our B top right here. Instead of coming up to the 618 like we anticipated, we actually topped out at the 0.5. So we saw some clear weakness. And then from that point on, we're basically just looking at our next leg down. And we know the next leg down takes us to roughly 20K. So if we lose 30K, we immediately go to 20K. We have a Bitcoin futures gap at 24,300. So that's obviously a little stumble along the way. But the truth is, if we lose 30K, I think it's going to be a fast track to 20K. And I have much lower targets than that, but I think that will at least be some sort of like temporary bottom. Obviously, crypto has looked like trash forever. I've been mean and talking about how trashy crypto looks forever. And I know it hurts people's feelings, but once it becomes a reality, it's like, oh wait, maybe I should have listened. Maybe I should have closed my positions. Maybe I should have took profits. Maybe I should have shorted. It is what it is. Hindsight's 2020. Hopefully you learned a lesson. Or if you're just finding the channel, you go back, look at the old videos, and obviously you will see what I've been talking about. But Bitcoin next on the spot chart, Bitstamp. Again, new low, taking out the swing low from back here in mid 2021. And obviously, we've been discussing the same chart. Please, disregard how dirty and messy and ugly it is. We can get rid of a couple of these fibs now that we have violated some key levels. So obviously, we're paying attention to the level we're at holding. Obviously, we have our A, B, C, but in this case, it's actually a 5-wave downside structure in place. And, obviously, we have almost reached our 3rd wave down. So that is right around that 24,000 level is what we're expecting. And then another, push back up. Obviously, the time is not necessarily going to line up, but the price points are more important. So whatever happens at this point in time, wherever we break down to, we'll have to reevaluate where the 4 comes back up to. But using our typical measure moves and, extrapolations of calculating downside potential, you guys know that I have some key targets down here to the downside, and we could go much, much lower on crypto. If you haven't watched the macro breakdown video where I talk about how Bitcoin gets to $3 million or how it could go to 1,300, might want to check that one out. All red histograms, bearish control zone, absolute trash. Bitcoin looks like garbage. Crypto looks like garbage. We tagged the 200 exponential almost perfectly today. 200 simple is much lower, about 22,300. We're seeing no positivity on the weekly chart. Again, complete meltdown after the rejection. And again, no surprises here. We have weekly bearish divergence. We have monthly bearish divergence. We have all red histograms. The price is completely melting down. The indicator oscillators are diverging from each other, and they're accelerating to the downside. The last time we saw something like this take place was back in 2018, and the 2018 drop, once we lost the 21 moving average, was 50%. It was from 6,000 to 3,000 in 2 months. So is it possible that in the next 2 months, we lose 50% of Bitcoin's value from that 38,000 level, and we're at 19,000? I think it's very, very likely. I mean, we're already $10,000 on the way down. So we're literally halfway of the 50% capitulation I've been predicting and calling for. So, and maybe we go much, much lower. I mean, maybe we go much, much lower. We'll have to see, but obviously, crypto just looks like trash right now. So Ethereum having its meltdown. So our target was 2,000. We did get there. Okay, 1992. So yeah, we've been talking about $2,000 Ethereum for some time now, and we made it. We made it to 2,000. Congratulations. That was our measure move breakdown from the channel. And then also we have the 236 slightly lower. We do have some support around 1,800, but obviously 2,000 was a key level. Again, just complete trash, completely melting down. And these are the good cryptos. The bad cryptos already melted down 99% in a single day. So Ethereum target to downside, probably going to 1,650. Probably going much lower after that, but looks very, very weak on the daily, on the weekly, and again on the monthly, we're losing key levels. The last time that took place, Ethereum had an even heavier sell-off. So from the 21 to the bottom, Ethereum was down 81%. From the peak to the breakdown, Ethereum was down 94%. So we're talking about 94%. We're talking about another 81% from the breakdown from the 21. That's what happened last time. Doesn't have to happen this time. That's $466 Ethereum. That's $466 Ethereum. Another 81%. Your position will be cut by 81%. Maybe, or maybe it just goes straight to the moon. Maybe Ethereum 2.0 comes out and, everybody lives happily ever after. So weekly Bitcoin dominance chart, shooting up to the top of the channel. So obviously we had our little fake out right here. You guys know my target has and is still 45. We're almost there now. It's 44.5. We're at 43.8. Once we get to the top of the channel, our triple bullish divergence will have been playing out. We retest this level. If we break, we get the measure move to the upside and our potential target between 51 and 57%. Obviously, we've been talking about Bitcoin strengthening compared to altcoins, and what that meant. It meant that Bitcoin was going to be breaking down. Altcoins were going to break down much faster because we almost never see Bitcoin outperform altcoins to the upside. The trash always rises to the top when we're in a bull market. When we're in a bear market, the trash always gets wrecked much further. So that tells us, obviously, Bitcoin dominance chart has been signaling us with this triple bullish divergence, hey, get ready. Bitcoin is about to explode to the upside and destroy alts. And what does that mean? It means the prices are going down on everything. Bitcoin's just staying stronger because it's not as trashy as the altcoins as it completely melts down and goes to zero. So total market cap on the weekly. So again, no surprise here. We talked about this level, 1.7 trillion. We said the next level was 1.6 trillion. And now, we've been expecting down to 1.08 trillion. But the little stair step on the way, 1.3 trillion. We hit it. We did it. Congratulations. Another, $400 billion of value got wiped out of crypto in the last 2 weeks. So, definitely expecting, 1 trillion hopefully holds 1.8. After that, what is it? 817 billion? Complete meltdown. And this looks very, very toppy. So Matic obviously having a complete meltdown as well. New low and just completely wiping out everyone's gains. Since this thing was literally listed on Coinbase, was 69 cents. So it's officially at that price, slightly above that price, but it was literally 2 days worth of price action, basically propelled it from 40 cents to 71 cents. So again, just complete destruction, overshot the 618, trying to move back to the upside. But let's be real. What are we looking at here? We're looking at dead cat bounces. Sure. Okay. It's not like this is just going to stop all of a sudden and reverse the trend. We're probably just looking at, oversold conditions, temporary bottom, people trying to pick the bottom or buy in or dollar cost average into something they're already completely wrecked in. Avalanche is next on the daily. Again, just complete and utter destruction. Since we broke down from that $74 level and our little wedge triangle going on here, complete meltdown, complete destruction. I don't even know what this thing is down in the last couple of days, but this is just complete destruction. In the last 4 days, this thing dropped another 50%. It's still down like 35, 40%. I know this is only listed on Coinbase more recently, October of 2021, but anybody that ever bought this on Coinbase is obviously upside down. We hit the 1.618 Fibonacci extension to the downside perfectly, and we're seeing some temporary support. But again, all these coins are trash. They're all fake. They're phonies. They're garbage projects. They do nothing. They serve no purpose. And we're looking at the good ones. So, what's going to happen to the bad ones? Probably going straight to zero. Rug pull. Solana, again, looking like absolute trash. Just complete meltdown from support, as expected. 75 needed to hold. Did not hold. We're at 618. Next target to downside would be the 786, which would be $35. Next target back to the upside would be like that $73 range to retest the breakdown. But again, just, these things look like absolute trash. So Monero looked good there for a second. Obviously, anybody that took profits, on that initial push, that was a great little move up. But let's be real. This thing was absolute trash. It has completely melted down. I try to warn you guys about this one and how dangerous it could get, how this failed breakout could completely melt down. And obviously that's what's happening. Now, we do not want to lose sight of the big picture, though. Now, this is threatening the lows in the 130s right here, but we still have a potential for, a cup and handle pattern. So we don't want to get too bearish at this point in time on this, but we know right now it looks pretty bad. Looks pretty trashy, but there's definitely some potential here for Monero. And then Algo, again, just complete meltdown. Did get within literally pennies of our target. We hit 40 cents, and our target was, 39 cents. So we were about a penny off on this, unfortunately. But, that was a pretty aggressive move down. Obviously, the 618 is still our target around 36. 36.5 cents, something like that. Clearly just, melting down, complete meltdown. Crypto space is obviously trash at this point in time. There's no denying it. Everything is in a bear market with the exception of a couple things. And one of the best things that wasn't in a bear market just lost like 95% of its value in a single day. So that was probably the strongest crypto that just got wrecked the worst. What's going on, Calma Betty? Good to see you. How are you doing? Bitcoin to 10K? Yeah, I mean, you know what it is. 24K, 20K, all that good stuff. We've got plenty of targets. 6K, 1300, 800. I don't think it goes that low, but we'll see. I'm not ruling it out. Yoda says, oh, we have been listening. Crypto trend trader. Yeah, I know you guys have. Your videos changed the way I behave during this cycle. Educate myself. I got absolutely wrecked 2018. Failure greatest lesson is Grandmaster Yoda. Hell yeah, man. Good to hear. I'm glad to help, glad to share the knowledge. Glad to, anybody that listens and takes something away from these things or learn something. Obviously, that's huge. I watched this all happen, throughout the last couple cycles. And, everything that happened in 2018, you know what I mean? I've pointed out quite a few times. So many people did not take profits and gave back everything they ever made and more. The problem is as things go up, you wish you had more money in them. So when they start to pull back and you don't realize they're topping out, you start pouring that extra money in and buying the dip. And then next thing you know, you've dollar cost averaged up all the way to like nearly the current price. And then any further sell off after that basically takes you negative. So at this point in time, there was I can't remember where I saw that, maybe CNBC or I can't remember what it was, an article somewhere or a little like news blip. And basically said that over 50% of crypto wallets are negative now. And something like crazy about like retail or something like that. Like 75% of retail that has, I think it was less than 10 Bitcoin, is upside down on their positions right now. So, and that's just Bitcoin. Crypto in general, probably much, much worse. Gold next. Gold had a pretty heavy sell-off. It did hit our 200 simple. That was a big level for us. So we'll see what happens here. As long as we're between the 200 exponential and simple, I have a neutral bias on this. We're obviously in the bearish control zone, looking to have a crossback to the upside. This is the key support level that we expect to hold, though. So we had talked about this descending pink line right here and how we wanted to tag it. Again, I didn't expect us to tag it that quick, but we have tagged it. We tagged the 200 exponential, the 200 simple, and the pink line. So again, we're looking for, and this is the bottom of our channel. Now we only have one touch point on the top of the channel as of now. So it's not that accurate. We don't know. Maybe the channel needs to be something like this and we need to ignore the blow off top and just use this top right here. And then when we come back up, that's where we'll top out again. We really don't know. We kind of have to just wait and see, but we have the channel in here hypothetically, or just to kind of give us an idea. But again, that gives us a macro cup and handle pattern, because the beginning of the handle itself is typically a descending channel, and then the breakout of the handle takes us back up to the top of the cup or the rim. And then once we bust through that rim job, that's when we get our measure move to the upside. So, but obviously, we have hit our target perfectly to the downside. So again, lots of positions that we could potentially take up right now for scalps or adding to, or quote unquote buying the dip. But it's very, very important, in my opinion, that everybody keeps in mind right now what is taking place. And what is taking place right now is, an indiscriminate meltdown of asset prices. So again, all the people that have been saying for the last 2 years, Ray the loser Dalio, for instance, cash is trash and all this stuff. Well, I mean, is cash trash though? Or is it the best options play you could ever take out? I mean, because most of these, I can't even tell you how many amazing assets you could purchase right now. Stocks, cryptos, whatever it is you want to buy right now, bonds, anything you're looking to shop for, with the exception of, energy and houses or some commodities too, you could buy up for a fraction of the price that they were before. So I would say that the cash position has been the best position, because not only did you, quote unquote, inflation at 8%, whatever, average out over a year. So over a year, are we seeing these commodities? Are we seeing these cryptos, energy? Are we seeing, tech stocks? Are they going to sell off less than 8% in a year or more than 8% a year? Because I can't find anything that we're not already in, or that's not obviously like in our group of plays that isn't down at least 8%. So I would say the cash position was probably the smartest position. And I've been obviously screaming that at the mountaintops. So the gold play looks okay for now. Silver breaking down from key levels and putting in a new cycle low. So this is not good. Obviously, the low we put in today was 21.17. And since we got up to these levels, we haven't put that low in. We obviously have the measure move breakdown from the, channel right here. Clearly was distribution taking place, or so it seems for now. Breaking down from that level. Next key levels for support. I mean, I've talked about it a million times how if we lose 21, 19, maybe 1750 is what we're paying attention to. So 1750 comes in right around what would amount to, again, we're looking at these cup and handle patterns, and I don't just like see them all over the place, but when you see them, it's worth paying attention to. From the peak that we put in 2011, this is the beginning of the handle, that descending channel. And when we break out of the handle, we put in on longer time frames bullish divergence from that Rona dump, and then that took us back to the upside here, and then we're seeing this distribution pattern take place after our run up from 2021. Well, a breakdown from here takes us back down to the retest, and then we could potentially start just arching back up to the upside, and we could see this arc play out and take us all the way back up to like that $50 level, and potentially what amounts to like the biggest cup and handle in all existence since the beginning of time plays out, because this is our 1979 top, this is our 2011 top, I'm sorry, and then we're basically filling out the handle right now, and this is literally a textbook, absolutely beautiful cup and handle playing out right now. Now, how much longer does this take to fill out? Does it happen somewhere in 2028? Because that's what, realistically, could we see this? Oh. Realistically, could we see this handle just gradually curving up over, the next 5 years? I could definitely see that taking place. So we'll have to pay attention and see what happens. It doesn't need to be this like extreme straight up to the upside type thing. It could easily just drag and drag and drag, into later in the decade. And then at that point in time, it finally retraces to like 50 as we see, commodity bull run really take off, etc. But it's definitely worth paying attention to, as these cup and handle patterns are pretty reliable. I mean, nothing is sure thing, but if we have the opportunity to load back up on some more silver in the teens, there could be a definitely potential there. While of course you guys know my opinion is this is a better time to be picking up gold compared to silver, as we are basically in an uptrend now. So we have started into this 200 exponential and simple uptrend on the gold silver ratio. We're already up almost to 89. You know what, to tell you the truth, maybe it's not the best time to be picking up gold compared to silver, because this could be potentially topping somewhere. My initial target to the upside is like 90, 91. But we don't know. We don't know what's going to happen here. Obviously, this channel is playing out nicely to the upside. So a break to the upside could lead to a bull off top. A breakdown from here could lead to just an overall top and a failure of the trend. But overall, the way this looks right now, I mean, it looks super bullish. Last couple of times we flipped the 200 exponential and simple bullish. We went on like multi-decade runs on the gold silver ratio. And the last time we put in a new all-time high, which was 128 silvers to 1 gold. So is it possible we take out that all-time high and just continue this long-term uptrend and silver just continues to bleed value compared to gold? It really is. It really is. I'm not saying I want that to happen, but it looks like highly potential of happening. XPD, palladium, completely melting down below 200 exponential and simple. Looks like complete trash. I had an opportunity to save that level. The only thing looking worse right now, is basically platinum. So platinum had a nice push up here over the last couple of days. Bounced that same level we've been paying attention to. Technically put in a higher low, which is good, but it's below 200 exponential and simple, selling off. This is by far the worst performing of the precious metals. ACB, complete meltdown today, $2.29. Again, I'm not going to keep stressing over and over again how important it is to take profits, but I mean, the charts do it for us. But we clearly have, just another drive of bullish divergence. One drive here, 2 drives here, and now we have a new low. So, we don't know, is this going to roll over here and move to the upside, and then we'll have 3 drives of bullish divergence, but it's worth paying attention to. So when we see our first green histogram, that's where we're really going to be looking for a bottom. If it comes in above negative 0.31, again, that's going to be our third big drive of bullish divergence and could be a potential buying opportunity. I mean, these things are getting absolutely crushed. Obviously, we have earnings, period ending, date is the 12th of May. So estimate is negative 18 cents and revenue 41.817 million. So just a couple days away. We'll see what happens with that. But, you know, these things are just absolutely crushed at this point in time. They're trading substantially lower than their valuations. I mean, it's getting a little bit crazy at this point in time. The market cap is 491 million. Total assets are 2.2 billion with total liabilities of 554 million. Debt to asset ratio of 25. So if they took all their liabilities right now, 554 million, and then they took enough assets to sell it, which they have 2.2 billion in assets on their balance sheet, and they paid off all their liabilities, they would have zero debt, and they would have roughly, what is it, $1.656 billion dollars. So 1.6 billion, let's just say, for simplicity's sake. And currently, the market is valuing them at 500 million asset to book. So 500 million compared to 1.6 billion. So it's trading at like 33% of its book value right now. I mean, that is, you know, that's completely mispriced. Because, I mean, they're, you know, when you get down to these low dollar share for your stock and these ridiculous valuations, you know, you start looking like a key candidate for, you know, merger and acquisition. Somebody come in and just buy you up. I mean, that's just absolutely insane. So we'll have to see what happens here, you know, with earnings and everything coming on. But, I mean, it's just absolutely ridiculous. Some of these levels. But again, we'll see. We will see. Sorry, just kind of taking a look at some of that stuff at my own convenience. I mean, it's not unrealistic to think that some of these are going to go away. I mean, this is the all-time low. You know, we're talking about 2015 lows right here. This is literally the all-time low. Nobody has ever bought ACV and is in profit on this, ever. From, I mean, this thing, you know, July 2014, it became a publicly traded company, July 2014. So at this point in time, it has literally wiped out 8 years worth of gains. And it's valued at $2.91 now. At the top, it was $150. So let's just say you were going to be bullish on these pot stocks, one of them, for instance, and you did buy, and it just returned to the previous all-time high. That is a 6,444% gain to the upside. So 6,500% roughly, if it ever goes to all-time highs. Maybe it goes to zero. I mean, it's almost there now. Let's be real. It's closer to zero than it is the all-time high by a lot. A lot. Tilray, again, just, you know, why we take profits is so, so important. Completely melting down. Lost that low. So we have a much lower low at, again, $2.40. It's at $4 now. I mean, again, same thing. You know, this one goes back to 2018, but it's completely wiped out anything. I mean, with the exception of, you know, basically a 1 week period where it dipped below that in March of 2020 on that Rona dump. No one could have ever been in profit on this. Absolute damn shame. CCJ, so we broke down from that key level, our ascending support. We lost the 200 exponential and simple, as expected. I mean, we've been expecting this top. So, you know, we got our top. That's good enough for now. We've made massive profits on these uranium stocks. Let's let these things sell off and see how they play out. We have some clear levels we're paying attention to, but we lost the ascending support. We lost the 200 exponential and simple. And, you know, there's no necessarily like bottom in sight. So let's pay attention to like $17. If not, we'll pay attention to like $13, and we'll look for those as potential opportunities to get back in. So we'll look right around these levels here. I'm going to borrow our old reload targets that never got hit from back there, and then we'll just pay attention to those levels and see what happens. URA is next, again, completely melting down, headed towards our target here. So we are looking to reload on URA about $16.71. So there is definitely some potential to get back into this position. We also have some lower targets in play for a further retracement based on the potential 5-wave structure to the upside, and then that being the 1, and then this being the 2. So somewhere between $17.75 and like $14. We're really looking to load back up on this because if we're right and this thing is going to put in a potential third wave to the upside, I can't remember what the target is, but it is pretty ridiculous. If let's say it's a 618, it's 42.97. So from where we're at right now, it's over 100% to the upside. And then depending if we go lower, if we get our entry at about like $15, we're talking about basically like, 300%. Very nice. Oops. Where's that? URA. So UAC next, losing the 200 exponential and simple. Again, just completely melting down as expected. Still holding on to the ascending support line right here. Not the most reliable as we really only have like 2 touches with it. But this will give us our third potential touch. We did lose the 200 exponential and simple. Obviously not a good thing. We tagged our target to the upside. Let me get rid of that one. We're almost down to the 236 now. Assuming though, that was assuming we went slightly higher. We didn't get to my target. We slightly underperformed. So let me just bring this down and make it a little more accurate. So that'll give us our 236 roughly around this ascending support line. So we had a bunch of divergence taking place and now we're selling off and we're basically almost to that support. So let's pay attention to how this level holds right here around like 280. And then next we have UROY, obviously underperforming, has been for a while. Lost that ascending yellow support. We're back down here at our target area to the downside. But again, we look at these things like a staircase down or like that slinky theory where we have initial targets to the downside, but we're not looking to just load up the second our target gets hit. We're looking for some kind of other like signs from the market. Whether it's bullish divergence, whether it's exhaustion on your indicators, whether it's a volume spike, a rejection candle, a bottoming pattern. We're looking for something key, some kind of confluence from some of our other things, because this has officially just entered into a bear market. It did have one little fake out right here and pushed up, but it pushed up to a lower high. So we have a high, we have a low, we have a lower high. Now we have a lower low. So at this point in time, we really need to pay attention to where this is going to lead us. And instead of just trying to get completely in front of it, we want to be in front of it waiting, but we want to let it do what it's got to do and see how things play out. Because it looks like we're going to come down slightly lower and maybe we'll form some sort of like channel. But again, we're just seeing a pretty steady sell-off. Not looking to just jump into stuff right away until I see some sign of like bottoming. A big spike up on the VIX and a higher high print would look good for a potential like temporary bottom or temporary exhaustion. So Hex, okay, so we took a look at this one last time and I basically said this was our target to the upside and it looked pretty exhausted. So instead of taking a long position on this or looking for a long position on this, we discussed why we were looking for a short position on this. Now, obviously, it never went to the upside. It literally was here when we looked at it, and it's only just melted down since then. So, obviously, in hindsight, we see how good of a position that would have been as a rejection at the 200 exponential and simple. But that was 55% downside with 30% upside. So the risk reward was 2-to-1 to the downside. It was below the 200 exponential and simple, which gives us favor for probability of success to the downside. And obviously that has played out quite well as it's already down from when we did that trade setup. When we looked at this last time, it went down 29%, but it's currently sitting down 24%. So, if you sold or shorted or whatever at this point in time, you were sitting in a very, very hefty profit. So obviously markets are playing out exactly as expected. There have been no surprises here. If anything, the surprise is, just how long it's taken for some of this stuff to melt down. But really doesn't surprise me at all. I mean, the conditions are just getting worse and worse. The war is not going to end. The CPI is not rolling over. We haven't maxed out inflation. We're looking at producer price index as well. Energy is still spiking. All the things that are pushing this up high or keeping it high are still high. So even though we're getting into that 1 year period where we're going to start to really trim off like 2, 3, 5% off of our year over year numbers, it doesn't mean prices are coming down. It doesn't mean economic conditions are getting better. I mean, I honestly feel like this has only just begun because there's still a lot of people out here that are not accepting that this bull run is over. Every single chart we have looked at today is below the 200 exponential or simple moving average. And I didn't cherry pick these things. I mean, we're looking at all the same charts we always look at. So it's complete wreck city in these markets. No surprise, obviously. And I don't think it's over. I don't think it's just going to stop all of a sudden because people are uncomfortable or because they lost everything or because retail is wrecked. I discussed this at this point in time. It's what, like a year ago or something like that. I basically said this is the exact situation that took place in the roaring 20s that led into the Great Depression. What happens? Okay, so you go from a predominantly white, middle-aged, male demographic in investing. And then over the last couple of years, you have branched that out completely to, and again, I'm not trying to generalize against people. Like there's plenty of women, there's plenty of young people, there's plenty of, non-Caucasian races that invest. I'm talking about in general though, as a broad spectrum, painting everything with a broad brush. What we saw take place in the late 1920s or in the roaring 20s leading into the 30s was they basically brought all this extra money, all these extra people into the markets in this euphoric phase. Inexperienced people that had no exposure previously, and then they started to see massive gains and poured everything they had into these markets. And what they were doing was they were buying the luggage, the baggage from all the smart money that was unloading after massive, massive run-ups. And then what happens? The markets crash and all the women, all the, other people that are new to the markets, and we see it clearly. You look at CNBC, 5 years ago and look at who all the anchors are. Look at all the talking heads are. It's a bunch of, middle-aged or older white men with the occasional female. Now you look at CNBC, look at who they're interviewing, look at all the investors, all the money managers, all the employees at CNBC, look at them all, and what do they look like? I mean, it looks nothing like it looked like. So, and I'm not saying that you should only listen to, rich old white people, but if you have a space, an investing space that's in 30, 40-year cycles, and it's predominantly dominated by this certain demographic for a long period of time, and then all of a sudden, now there's a bunch of like young, pretty female faces or, other races or whatever popping up on here nonstop, and you're talking about, Black and Hispanic equity in investing, and you're talking about putting more women on the boards of these companies. I'm not saying those are bad things, but I'm saying those are clear topping signals, in my opinion. It's literally what we saw happen in the 1920s. You drag in all these movie stars, they start talking about investing. It's the same as our, stars now, or people on TikTok giving out financial advice. Dave Portnoy pulling, Scrabble letters and then buying tickers live. Like, I mean, this is it. It's exactly what we saw. So if you didn't heed the warnings or you didn't hear the warnings, I'm sorry, but we know what's happening right now. This is basically a massive liquidity grab. It's distribution taking place all over the faces of retail, all over the faces of these people. It's the same thing that happened in 2008. It's the same thing that happened in 2000. It's the same thing that happens at every market top. You drag in all these unsuspecting people that think markets only go up. It's easy money. They quit their jobs. They turn into full-time traders or investors. They spend no time learning about how to value a company or how to do technical analysis. They tell you about fundamentals and innovation, and they give you the Cathie Wood, Michael Saylor pitch and, where their portfolio is at now. I mean, they're probably okay because they stole everybody else's money in fees and then lost all their actual money, trading it. So, but it is what it is. No surprises here. It's very unfortunate. This is the best time to learn. You don't want to go looking for trades and putting yourself at risk. Very good time to be defensive. Has been for some time now. We're able to perfectly call the tops on, Bitcoin, on Ethereum, on all the major indexes, on the majority of, stocks. We called the ARK fund top perfectly. And we've been absolutely crushing these markets. So all we have to do is sit back and do what they did in the 30s. When everything crashes down and everyone gives up and capitulation takes place and no one has any money left because they were being reckless, buying things on margin or, buying second houses or third cars or, whatever it is. And then eventually they have to sell all their stuff. Well, that's when we're going to be the buyers. We're going to be the buyers at the bottom or near the bottom. and no one else is going to have that liquidity. No one else is going to have, you know, the money to buy then, because they're going to be so overextended. They will be selling all their other things to meet margin calls or to, you know, pay bills. And in the meantime, you know, we took profits and we've just been patiently waiting. You know, I've used this analogy plenty of times. You know, we're that gator. We're just sitting in the water, just floating, sitting, waiting. We don't have to go look for opportunity, because eventually, you know, some unsuspecting gazelle or monkey or whatever, anything but a hippo, is going to just wander a little too close. And, you know, we're going to take a bite out of it. And that's exactly what's happening. Everybody's getting completely wrecked in these markets right now. I can't speak for everyone in the group or everyone, you know, that watches, but, you know, it's been nice nights of sleep for me. Definitely have all the spare ammo whenever we're ready to deploy it. So, you know, I don't think it's necessarily a good idea to start picking the bottom or anything like that. But I mean, after some of the pullbacks we've seen in a lot of these companies or even cryptos, it's not unrealistic to think that opportunity is going to be presenting themselves left and right. And we don't want to stay too bearish for too long. But in my opinion, this thing has only just gotten started, and we're seeing no true signs of like any kind of bottoming. I think the real thing that we got to look out for is basically the Fed coming out and saying, okay, you know, we overshot, we're going to take it easy, and then kind of see what the reaction looks like. We'll definitely get some reaction rallies back to the upside. We'll definitely get some, you know, horrible dumps to the downside and complete implosions of companies like stocks, cryptos, whatever. But at the most important thing at this point in time is just patience and protecting our principal, our capital, and then just waiting for the opportunity to deploy it. So this is a great time, rather than spending every 2 seconds watching the charts and looking for opportunities. It's a great time to make sure that you're educating yourself and you're continuing to learn. Because if you do all the learning in the bear market, when the bull market comes, it's exponentially better. If you wait until the bull market comes and then you try to learn, you're not going to know if you're actually learning anything or if you're just getting lucky because we're in a bull market. So, but yeah, I think we're going to go ahead and wrap it up there. So I'll jump over in the comments real quick. Kalma Betty says, is that possible to spot the bottom? Man, I don't know what you're talking about. You guys got to be more specific with the comments, because I only look over so often, so I can't really tell when you left that. I could have talked about anything between then. Cool Sheet says, what's up, bro? Hope everything is Safu in these wild markets. Yeah, man, I'm doing great. I hope you all are too. Hopefully everybody's been dodging these, you know, bullets like the Matrix. Manny Peters says, hi. I need you help with SAR USD. Looking to sell some USD, please. Long term. Jewel Thief is showing a sell on SAR. What is SAR? That's a crypto, I'm assuming. SAR USD. I've never even heard of it. I mean, which isn't surprising with all these cryptos, but oh, South African Rand? Is that what you're talking about? I need you to help with SAR USD. Looking to sell some USD, please. Let me know if that's what you're talking about. Are you talking about South African Rand? Okay. Sorry, I just assumed it was a crypto. Because we were ending there. So let's take a look. What are you looking on? I guess the futures chart we could look at. Oh, nice, man. That's awesome. You and our boy Elon. So let's take a look. So I'm on the futures chart right now for the US dollar, South African Rand futures contract in front. So let's look at our long-term chart. What the hell? Why does this look so crazy? I don't know, man. Is this the chart you normally look at? This looks insane. I mean, it looks pretty toppy right here on the daily. Hard sell signal. It's coming back down towards the 80 level. Couple red histograms. What did you say? Jewel Thief is showing a sell on ZAR. I think what I would look for, assuming you were looking at the daily chart, what I would pay attention to is we have the hard sell signal. We have, which is obviously the cross of the stochastics, and they're rolling over to the downside. But technically, I don't validate the signal until the blue stochastic crosses below the 80 mark. So once the red highlight on the background goes away, that's like the confirmation hard sell signal. And that's what I would be paying attention to. Because that's probably going to correspond with what amounts to like a double top right here. Couple red histograms. Yeah, I mean, it does look pretty toppy. Now, the only thing you've really got to pay attention to, though, is we're back above the 200 exponential on simple. So we're in a real long downtrend and crossed above the 200 exponential on simple and had a decent run up. And then it came back down and put in another higher low. So now it had a nice run up again, and it's back to that same resistance level. So the real thing you have to pay attention to is when and if this comes back down here, does it find support at 200 exponential and simple? Or more importantly, just does it put in a higher low? Because as long as, and again, there's not a great way to like draw this, because it probably should have been something like this initially, and then it lost support and broke down. So now we can kind of use maybe this as a support and see how that acts. But this is clearly the swing low, and then this is our next swing low after we put in a high. So what we're looking for is basically this is our low, our high, our higher low, and then we're looking for a higher high to be put in. But the most important thing is that we just don't take out our low. So, but I don't know, man. I mean, I wouldn't get too bearish on this chart in advance. Let's go back to that weekly now and just look at like the most recent price action and kind of ignore whatever this crazy block is over here. So on the weekly, we have the 200 simple right down here. Yeah, I wouldn't get too bearish on this just yet. I mean, looking at the weekly, we're coming out of the bearish control zone. We've got a hard buy signal, and everything is angled like powerfully to the upside. And then again, here we have green histogram above the slope line, above the zero line. So this actually looks pretty bullish. This actually looks pretty bullish. Yeah, I mean, it probably goes higher. It had a pretty strong rejection of lower prices here, and then gapped up, came back down. The daily chart looks a little bit toppy, but honestly, it probably, I mean, maybe it goes down like from 16 to 15 or something and find some support around there. I wouldn't get too bearish on this chart right now, honestly. It definitely looks like it could still run. I mean, but look, the way I look at it though is, you're at resistance now. So, if I'm right and this is what we're looking at, and we do see obviously some temporary potential like exhaustion at these levels, but this is resistance. We're at resistance. This is support. We're well above support. So the real question is, if it goes down, you're talking about like a 7-8% move. And then if it violates this low right here, 10%, you're talking about probably revisiting the lows. But if it can't break through right here, that's probably where it's going. If it does break through right here, it puts in a higher high, and then, it's hard to argue anything but we're in an uptrend. At which point in time, I would probably ditch this, and then I would probably go to the channel tool, and then I would just look for something like this, and then look for a top somewhere around here. So I think that's probably the way to look at it. Again, this chart is a little bit funky, but I would look for something around like up here as a potential top, especially the way the weekly looks right now. But again, if you're trading it on the daily, it's important to know what the weekly trend looks like, but also remember what time frame you're trading it on. But I mean, in all reality, you know, if it just shot up through here and broke through resistance, you're talking about maybe 6% upside target, you know, or it's already topped. And then if you're talking about downside, you're talking about maybe 8% downside to support. So there's not a great trade setup currently, but if this is your predominant currency, and again, if we look back at this too, you know, this was previously support a couple times on this descending triangle before a big breakdown. So this could easily act as resistance a few times. I wouldn't be surprised to basically see, what am I looking for? I wouldn't be surprised to basically see something like this, where it basically comes back down here and then bounces back up to here, you know, and then we get sort of like some kind of consolidation at resistance, and then a kind of breakthrough to the upside. And, you know, it would basically be the opposite of what we saw right here. Acted as support, 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 support. Each time we put in a lower high, and then we got a breakdown. And then here it would act as resistance, 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 you know, and then we finally break through and we can hit our target to the upside, which could be much higher. It could happen right away instead of all this extra fancy stuff. But hopefully that helps. Definitely a new one. So he said, South African Rand, yes, from South Africa. Colin Betty says, can you call the bottom of the crypto market when we get there? Yeah, I mean, I called the bottom of the last one pretty much perfectly. And then Manny said, we called the bottom, we called the top. I mean, I don't like to like pride myself on that or look for like macro bottoms, but to tell you the truth, the bottom in the crypto market like last cycle was so easy. It was so easy to call. This time it's probably going to be a lot harder, but I still think it's fully viable. Manny says, thank you so much. Zimbabwe is next to us. Oh, is that why with the crazy stuff going on with it is because of Zimbabwe? I don't know, man. I don't stay up on my South African news as much as I should. I mean, I know it's always obviously some crazy stuff going on in Africa in general, but all right. Well, I mean, we made pretty good time there. Ran through everything. My voice is obviously still a little bit shot from the little sickness I had last week, so maybe I'll go ahead and let it rest up, and we'll call it there. About an hour and 22 minutes, so it's not bad. Hopefully a little more, you know, watchable for people that have like less time. Now that we're streaming 3 days a week, I know it could be a strain to try to watch like 2+ hour streams per. Good to see you, Honkiness. Says thank you, Guy. Of course, brother. And Manny says we have no electricity for 4 hours a day. Wow, dude, that's insane. Yeah, I did a missions trip like decades ago in Haiti, and it was crazy like that, man. They would have literally like days without power, and then when they did have power, you would get like, you know, 6 hours during the day or something like that. It's definitely something else, man. Definitely a different world. Definitely a different world. Colin Betty says, thank you, bro. Keep the good work. Yeah, for sure, man. Appreciate all you guys and all the, you know, optimism, all the positivity, you know, all the kind words and everything. Truth is, right now, tons of volatility in these markets. Big danger zone. I mean, we don't want to be just rushing back into these things, trying to pick the bottom the whole way down. We want to look for some clear bottoming signals, and we're not even close to that on a macro right now. We haven't even seen an initial low. See, this is what we need to potentially even call a short-term bottom. We need a low, and then we need another low to compare it to. And then ideally, we see divergence, and then we can start to see, you know, some exhaustion and watch everything start rolling back over to the upside. That's what we're really looking for. But right now, we're not even seeing our first low yet because we're making new lows like every day on everything. So as long as we're making new lows, you know, you can't really look for a low yet because you never really buy the first low. You always buy the retest, which is sometimes a higher low, sometimes a lower low, but you buy it off of divergence and confluence from your other indicators, oscillators, like key Fibonacci levels, you know, resistance, support, whatever it is that you're using. And the more of that telling you this level is the bottom, the better. Moving averages, but we're really not seeing that right now. As long as we're just putting in new lows on like a daily, weekly, or monthly basis, you know, I'm not even looking for a new low. I mean, I'm not even looking for a like tradable bottom. Now, can we find some scalps along the way? For sure, and we'll definitely be looking out for those as well. But to tell you the truth, any scalps we take to the upside right now are extremely dangerous because they're counter trend. And any scalps we try to take to the downside, there's been so much massive downside movement already. The risk reward ratio is not that good usually after like big moves to the downside. So again, what we're looking for is the potential for like a rounding bottom or like a V bottom, like big bounce, but not going to be a macro bottom at this point in time. Just a temporary bottom for a quick scalp. You know, after that, we really have to see like a second bottom. So as long as we continue to sell off, I'm really just not even looking for bottoms at this point in time. Now we keep hitting targets, and I hate to just be like, oh, we hit that target, so let's not worry about that one and we'll look at the next one. But we need to see some kind of like relief from selling before we can see like positive buying coming in. And a big thing for me is like big rejection candles. Like if we go down and then we put in a massive wick rejection, you know, that starts looking good to me. It's like, okay, the market is rejecting lower prices. Buyers stepped in. We're seeing massive volume, but we're not seeing that. We're seeing big volume come in on selling, but we're not seeing enough buying volume come in to like put in one of those like potential wicks or tradable bottoms. We see a little something on the 4 hour for like crypto, but again, it's just because we had such an aggressive move to the downside. I think people step in and say, oh, this has to be at least the bottom for now, or I'm buying the dip, I'm buying the bottom. Markets they're not forgiving like that. So Manny says, thanks, I'm getting my Harley today. Oh, nice, man. Road Glide Ultra 107. Hell yeah, brother, have fun. Have some fun riding out there. Be careful. I don't know what your roads are looking like, but that's what's up. Nothing like a good old rumbling Harley. But yeah, we're going to go ahead and wrap it up there. Appreciate everybody for tuning in. Obviously appreciate all the support. You know, I know it is brutal in these markets right now for a lot of people. Hopefully, you know, I'm not being like too much of a dick or rubbing it in anybody's face. I imagine you guys that are all watching are probably doing just fine because we've been preparing for this for the last, you know, year plus. You know, we knew exactly the areas we were trying to get out and take profits. And again, same thing. We've had some real nice tradable bounces along the way. You know, we had nice Bitcoin crypto tradable bounce back to like the new all-time high. We've had some real nice tradable bounces in a lot of these stocks as well. We have to really just let the markets tell us what they want us to do. And then we'll take advantage of it because that's what we're here for. But that being said, going to go ahead and wrap it up there. It is 9:30 p.m. Eastern Standard Time on 5/11/2022. Make sure to protect your principal, protect your capital. You know, just be patient in these markets. Most important thing is making sure you don't lose. That way you still have something left to win with. But remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But that's it for today. Crypto Trend Trader, and I'm out of here. Peace.